Hello everyone. As we are committed to make your preparations more strategic with the most easiest ways, we are here with another fruitful session. As the interim budget is announced on the 1st of February 2024, today we have Mr. Jayant Parikshit sir with us. He is the faculty of Vajiram for Economics and Current Affairs. He has 8 years of teaching experience. He is also alumnus of Delhi School of Economics and IIM Lucknow. Well, his student fan following is no joke. What we have in today's session, we will be discussing the interim budget, main primary focus, the explanation, the MCQs, and will also be providing the toolkit during the program. Now, one more important thing before I call Jayan sir in the frame, this is only the part 1 of the discussion for interim budget. For the rest, stay tuned till the end. Sir.
So, a very good evening to all my students. Hope you are all doing well. Like every year, we are back with the interim budget. This time, we don't have an economic survey because elections are due. An economic survey and a full-fledged budget would be released only after a couple of months. So, very good evening, and hope that I'm able to help you guys with understanding the basic concepts and how to utilize interim budget for UPSC purposes. Now, before we start, let me give you a very brief background, just a quick glimpse into what is the meaning of a full-fledged budget and an interim budget. Though I know that you all know it, but still, let us have a look at it. So, guys, whenever we think of the word budget, budget is of two types basically. One, which the government has to present, because Article 112 says that every year the government has to present annual financial statement, which is called as a normal budget. Now, whenever normal budget is presented, it basically talks about 12 months of sources of revenue that the government plans to have, as well as the expenditure that the government plans to incur, which means that it starts from April 1st to 31st of March. That is the duration covered in the normal budget, which is also called as annual financial statement. Now, if the government has to make any changes to the tax rate or tax structure, the government of India introduces finance bill in the parliament. Similarly, when the government has to withdraw funds from consolidated fund of India, they introduce appropriation bill. That is mainly for expenditure purposes. This is what we call as normal budget. Now let us look at the interim budget. Now, what is interim budget? So suppose that this is an election year, or the government of India, let's say, has lost majority in the parliament and there is a caretaker government. In these kind of situations, normally the governments present interim budget. Now, interim budget is not a full-fledged budget, so there are some elements which you see in full-fledged budget which is missing from the interim budget. I'll give you an example. So for example, you will not see too many drastic changes in the policy or too much of changes in the taxation structure in the interim budget. Interim budget basically is introduced to maintain the continuity and flow in the policy making in the government. Now, what are the things that you will find in the interim budget? In the interim budget also, you will find expenditure as well as revenue. Here, the government would talk about the expected sources of revenue as well as the expenditure requirement for a couple of months, maybe 2 months or 3 months, till the time elections happen. Now, to withdraw money from consolidated fund of India in the interim budget, the government presents vote on account. This is the basic idea of the budget. Now, if you remember, every year, whenever we do the budget and economic survey analysis, before we get into the deeper concepts, we always, as a rule, make sure that we are able to understand what to extract from the budget as well as economic survey for UPSC purposes, right? So that is what we are going to do. Before I take you deeper into this year's interim budget, I want to help you guys by showing you what are the important elements that we can extract from this year's interim budget. When I was going through the interim budget this year, I could clearly see from UPSC perspective that it can be divided into 5 major components, and there is a 6th one which I call as way ahead, which is not explicitly mentioned, but somewhere it is mentioned, somewhere it is incomplete. So majorly, there are five elements which I could identify in the interim budget this time. The first is the report card of the economy. That's the first part of the interim budget, which I could clearly see, which means that there is something what is high frequency indicator. For example, if you look at the industrial production, inflation, if you look at how some of the most important industries like coal, energy, petroleum, all these industries are performing. So this gives you an idea about the whole performance of the economy. Similarly, if you look at the inflation figures, balance of payment, tax collection, these are high frequency indicators. It gives you an idea about basically the health of the economy. Looking at high frequency indicators, we can derive what is the state of the economy, or what I call as the report card of the economy. Just like we have report cards when we appear in UPSC, right? And I hope that the UPSC report card turns out to be really well for all of you guys. Now, so the report card of the economy, we are going to examine through basic indicators like, as I told you, balance of payment, tax collection, inflation, GDP, sectoral performance, so many things are there. Second is India and the world. We understand that this is the peak of globalization that we are living in. And with every passing day, the globalization is not an option for anybody. Globalization is a compulsion, and we have to learn to stay in this globalized world and take care of not only us but the entire world. Because when we become self-centric, what happens is regional imbalances happen that we can see across the world. So in the context of the very hostile atmosphere that we see across the world, how is India steering through, and how is India trying to maintain its stability and achieve its agenda of growth, as well as contributing to world prosperity and peace? That is what the interim budget talks about. I particularly like this portion which was given in the budget, though it was not expanded by the government, but I could clearly see the foreign policy and the international relation imprints that I could see clearly in the interim budget. Now, then the third part of the budget is the essence of the budget, which is called as the soul of the budget. That what exactly is the government of India thinking in terms of taking the economy, society, and the country in a particular direction. So that is called the essence of the budget, and we will see what it is. When I tell you the essence of the budget, exactly at this point, I think that we must look into a comparison between last year's budget and this year's interim budget. Though, if you personally ask me, I don't think that we should go too deep into it. Why? Because a normal budget will anyway come, and we will have to do the same comparison at that time. So, these kind of comparative understanding, it helps us mostly in the mains and interviews. So, if you are appearing in interview, it will help you. If you are writing your mains next time, it might help you. But my thought process is that when the normal budget comes, that would make more sense in terms of mains preparation. Nevertheless, I have seen last time when the interim budget was released, I clearly remember that similarly, just like we are going to discuss the essence of the budget today, I had discussed one essence of the budget at that time, and that question was there in UPSC mains. So we should never take the government documents lightly. Now, then I mentioned the highlights of the budget, that what are the standout features which I feel that make this interim budget quite unique in a sense. And if you ask me one standout feature, I can tell you, normally in the interim budget, we don't see too many policy changes. We mostly see policy continuation. But this time, interestingly, I could see a lot of new policies, even though the policies are not very bizarre or drastically new. But yes, I could see a few steps which the government of India has announced. They haven't given the blueprint, mind you, because the blueprint will be the responsibility of the new government when they come to power. So they have given the direction, but they haven't given the blueprint. I will talk about it. But that's a unique feature this year in the interim budget, because at least blueprint is something which I found to be unique. Normally, these many blueprints are also not given in the interim budget. So in that sense, it is different. Now, schemes in the budget. You will be surprised to know, and I don't know how to take it, because I wish the government had used less number of schemes in the interim budget. It would have been good for my students appearing in UPSC Prelims this time. But no luck, guys, because I could identify at least 32 to 35 schemes clearly being referred to in the interim budget. And I have made a list out of that so that we can prepare well. You see, there is a big question when you prepare for UPSC, that which are the schemes that we have to do. We get so much of trouble in memorizing all the schemes. In fact, the very word scheme gives us nightmares, because if you start counting the schemes, it's endless. But I could clearly see almost 30-35 schemes, which means that our task is cut out. At least those 30-35 schemes definitely have to be done. Now, way ahead, this I have derived from this year's interim budget, that what are the future course of action that the government of India is planning to take. Now, let us see, let us start. So guys, here comes the first slide. See, this is what I call as the report card of the Indian economy, and the report card I am going to discuss in terms of GDP, GDP per capita, inflation, unemployment, non-performing assets, which shows the health of the banking sector, government of India's favorite digital transactions, current account deficit, receipts and expenditure, revenue and capital, capex, budgetary deficit, sources of deficit financing, central government debt, and tax reforms. These are majorly some of the parameters on which we are going to examine what is the health of the economy. After we do that, guys, then we come to something very interesting, which is called as strategy for Amrit Kaal. So government of India is trying to make policies which should help us to reach the Amrit Kaal and complete 100 years of independence by achieving all its glory. So what has the government done? Government of India has mentioned 6 strategies in this interim budget, and government says that if we follow these six strategies, then we are definitely going to achieve all the targets and expectations that we have set for ourselves, so that we enter the 100th year of our independence with all the pride. So which are the 6 strategies that the government talks about? So for example, government talks about strategies like infrastructure development, investment, agriculture and food processing industry, sustainable development, inclusive development, research and development. So these are the areas government talks about. But I personally, when I was going through it, I saw and I noticed that all these 6 strategies of Amritkal, which we are trying to achieve, they are using a principle and a philosophy called as reform, perform, and transform. Which means that if anybody will ask you a question that in Amritkal, government of India is launching so many steps and priorities are there. So what is the principle which guides us towards the Amritkal phase? So the principle is reform, perform, and transform. So it says that if required, take a reform. For example, agriculture sector requires reforms. Then the government says that once we design a particular reform for a particular sector, then we have to make sure that we get the outcome, which means the focus is not the money that you provide to a particular sector, but the focus is actually the outcome that you derive from it. And at multiple places in the interim budget, the government of India talks about 2 things. One is outlay and outcome. Outlay means the resources that you are devoting for a particular program or a particular sector, and outcome is the result that you derive out of it. So government says that after independence till the year 2014, our obsession was outlay, which means the money that you devote in a particular scheme. But current government says that we differ from that ideology, and our ideology is that whether you are spending too much money or less money, but the efficiency with which the money should be spent, which means corruption should be reduced, leakages should be stopped, money should be and resources should be used more efficiently. That is the meaning of perform. And transform means ultimately, if you are launching a reform, it should lead to a big transformation in the society and the economy. So that is what I can clearly see. So this will be the second part which we have to extract from the current interim budget. And now see, look at the final part. This I could see that I'm not a big fan of the first part, but it's okay. The way ahead says white paper on pre-2014 and post-2014 economic policies. So the government of India says that before 2014, there must be reasons that we were not able to achieve the results. So government says we are going to bring a policy paper and detailed analysis so as to draw the right lessons for future, that what we should avoid doing if we want to progress in life. And government says we will also, in that white paper or document, we are also going to tell what went right after 2014 so that we are able to achieve good growth in the society and the economy. So this has been announced by the government of India. And then the government of India says that, guys, you remember that after 1990s crisis, the balance of payment crisis in 1991, we started with the reforms in India, right? First generation reform, then second generation reform, third generation reform. So in this interim budget, the government of India, in one of the paragraphs, and in fact, finance minister also said this in the parliament, that there is one reference to it. It says new generation reforms, which means that we can expect more reforms down the line when the proper budget and the economic survey is released. So way ahead is new generation reforms. There is one thing which I found to be very interesting. At multiple points, I could clearly see that the government of India is talking about raising more resources through capital market, for example, by selling bonds, by selling shares, and through multiple channels. So government says that we are going to bring more reforms in the financial sector and the capital market so that we can arrange more resources because we are a developing economy. So so guys, if you ask me that how many parts can we divide this year's interim budget, I can clearly tell you that this is part 1, this is the most important, part 2, this is part 3. However, there are some other things also mentioned in the interim budget which we have to see, but majorly these 3. So if you ask me that where would we use this in prelims, this can be asked in prelims. And this one is a typical big mains kind of question. But from here, and you'll be surprised to know that in this strategy for Amrit Kaal itself, there are 32 schemes mentioned, which means that this is going to be a material for both mains as well as prelims. And this one is way ahead. Now, these are the list of schemes that I have created, which has been referred to in this year's interim budget. You can clearly see the number is 32. There were a couple of more, but they were just used as passing reference. You can clearly see these are the schemes that we need to do. So, so many a times when I take the GS classes with you guys, I come across a lot of questions when you ask me that which are the schemes we need to do, because I understand that you have to study so many subjects. It puts so much of pressure over you. For a faculty, it's so easy to say that go and study everything from every chapter in every particular sector of the economy. But practically, it's not possible because it will put you under unnecessary pressure. So I don't think we should do that. First, what we should do is, if the document has been released, as a priority, we should prepare these schemes. Only then, if you have some time, you can prepare other schemes. If something else looks important to us, definitely we should do it. But this should be our core and this should be our priority. So this is one thing I wanted to say. Now let us start with the first one, the report card of the economy. And let me tell you how to read the report card for UPSC. See guys, I won't take much time of yours, but I'll help you by telling you and guiding you through how to use these documents. See, I've created a table for you. You can clearly see this table I have compiled looking at the GDP of India. So you can clearly see that 2019, 23.9%. You understand why it was low in the context of demonetization as well as GST. Plus there was global slowdown. Investment in India was very low. So see how low the GDP was. Then you understand that 2020 was a problematic year because of COVID. So it was negative. Then we bounced back 9.1%. Why did we go to 9.1%? Huge bounce back because of base effect. Base effect. What is base effect? Base effect means when you start at a very low level and you take even a small jump, the jump looks very good. The jump looks very substantial. But when you achieve this height, then you take the jump. Since you are already starting from a higher level, so the jump looks normal only. So base effect. And technically speaking, base effect means that your previous performance impacts your current performance. So in 2022, you can see 7.2%, 2023, 24, 7.3%. And the Ministry of Finance this year in the interim budget says that 2024, 25, we are going to achieve 7% rate of growth, right? Now, World Bank says 6.4 for this year. IMF says 6.3, OECD says 6.1, Asian Development Bank says 6.7. But Government of India, Ministry of Finance says 7%. So if I were to create a question out of it, I would create only one question, that which of the following is that average rate of growth of GDP which India has observed in the recent past? Answer is 7%. So they say, in fact, when you read a lot of research papers and articles by some of the prominent economists, you will get to know that they are saying that 7% rate of growth looks as if it is becoming India's new normal GDP rate of growth. So we should keep an eye over this 7%. See this, guys? 7%, 7.3, 7.2. So that is one of the things. Now, I could have shown you the same thing using this particular bar graph, but look how complicated it looks, isn't it? So we are not going to do it. What we have to do is we just have to do the trend from here. So what is the trend? Trend is that since last 3 years, it's good above 7%. And but if you compare it with 2021, since here base effect was there, current performance looks bad, but in general average, it's okay. But why? Why our GDP is doing well when the GDP of many countries across the world is not that well? So the answer is because our manufacturing sector has really done well, thanks to government of India's program like production linked incentive make in India. I know that there has been criticism by some of the great economists like Dr. Raghuram Rajan himself, who says that instead of making in India, we are assembling in India. But he's right in that sense. But I have a slightly different approach towards it. I can tell you that even in the automobile sector, when we started in India in 1960s and 70s, we were assembling only, but currently we are manufacturing. Give time, and the economy will definitely do well. So maybe assembly is currently what we are trying to do, but we have to wait and watch and see if the government takes the right steps so that other than assembly, we also start to manufacture the things locally. For that, a lot of reforms are required. So before passing a judgment, I would wait and watch. So, but manufacturing, howsoever it may be, but manufacturing sector is doing pretty okay. And the reason why manufacturing sector is doing okay is because input costs have come down. We have been able to control inflation, mind you. And the international agencies have said that India is one of the bright spots in the global economy because we have been able to control inflation. So when you control inflation, cost of inputs come down. When cost of inputs and raw material are down, your profit margin will increase, and that is how manufacturing sector is going well. But my worry is agriculture. And one of the things which disappointed me in last 1 year was the performance of agriculture, because we could not do enough of investment in the field of agriculture to make sure that we are able to increase the productivity and efficiency. So that is where I think the government needs to pull up. So agriculture sector has not performed. Otherwise, all other sectors have done decently well. Service sector also has a mixed reaction, majorly okay, but some areas needs to improve. Investment-led recovery has happened in India, which means that if you look at last 2 years, when India was having a lot of inflation, so we increased the repo rate multiple times, and then the RBI stopped. Now what happened is, then investment has been promoted by government of India by construction of infrastructure, capital expenditure, right? So not only private sector, but even government of India is also spending a lot of funds. And when government invests the fund, what happens? Crowding in happens, multiplier effect happens, positive externality happens. Since government expenditure, capex is happening, that is the one of the reasons that investment in India is going up, and private sector is also motivated to invest. And thanks to RBI, investment could have been in trouble. So because of these things, our GDP is pretty much okay compared to rest of the world. I want to show you the world GDP so that we can compare the world GDP and India's GDP. See, so look at this, please. So if you look at this comparison, this is the India's GDP. See how India's GDP is doing, and look at the world GDP. See, there is a gap. So if somebody will ask you why India is doing really well in terms of GDP, you can clearly say that we are a consumption-led economy. You already know it. Government investment is happening. Hence, most of the sectors are doing well. We have been able to control inflation. Other than agriculture and some services, we are doing pretty okay. That is the reason that our GDP is slightly better than the global GDP. Now, let me show you the sectoral performance, which will give you a very good idea about how we are doing. See, this is the sectoral performance. So guys, again, I have created this table from the interim budget documents and data. You can clearly see I mentioned some sectors. I have mentioned the last 2022-2023 rate of growth, and I have also mentioned a 23-24 rate of growth. Now, I'll give you an example. For example, agriculture and allied activities, you look at the year-on-year growth, which means that growth in agriculture in 2022 compared to 2021. So year-on-year means we compare this year with past year, that is year-on-year. So 4% rate of growth, but see in 23-24, it has become 1.8%, such a huge drop. So I have mentioned negative. which means that agriculture has performed poorly. Look at mining. Mining sector has really picked up, so I'll put an upward arrow. Look at manufacturing from 1.3%, 6.5, very good. So construction has also picked up. Trade, hotel, transportation, communication has gone down from 14% to 6.3%. One could be the base effect, and second could be that maybe the international scenario is not very good, so tourism could have been affected. That could be one of the reasons. Finance, real estate, and professional services, it has done well. Now, public administration, defense, and other services have done well. So one type of service, which is trade, hotel, etc., has not done well. Others have done well, which means that if I have to find the negative, I will say agriculture, we need to improve, trade, hotel, we need to improve. But who saved us? Construction saved us, and manufacturing saved us. Big savior for economy this time. Now see guys, if you look at the sectoral performance, look at the bar graph. If you look at this, it looks very colorful, but very dangerous because it will give you a lot of headache. So the best way to do this is to look at these numbers. But I know you will ask me this question, that do we need to memorize these numbers? Never. If you have to memorize a number, I would say memorize the agriculture rate of growth, because they can ask you this question, or maybe manufacturing rate of growth. I think this should be good enough. See, if you ask me ideally that should you memorize everything, so if you ask me that ideally should we memorize everything, I'll say yes, memorize everything. But then if you ask me that should you focus upon some selected areas so that you don't have big headache and tense situation just before the exam, 100% yes. So in that case, I would say don't memorize everything. Be selective in memorizing the data. So memorize agriculture and memorize manufacturing. That should be good enough. Now, look at this, guys. Inflation. So if I may ask a question to all of you, please answer if you remember it. What is the most standard measure of inflation in the economy that we use? Can you answer this question? Most commonly used measure of inflation. I'm watching your response. So can you please tell me what is the most common measure of inflation? Which CPI? All of you are mentioning CPI, but which CPI? We have so many CPI industrial workers, CPI agricultural labor, CPI rural labor, CPI rural, CPI urban, CPI all India, CPI headline, CPI core, CPI refined core. Which CPI? Answer is not CPI. Answer is headline CPI. We have so many types of CPI. I just told you. So which is the measure of CPI, which is the measure of inflation, which is used for general policy purposes. Remember the word general policy purposes. It's CPI headline. It is also called as CPI all India. It is also called as CPI combined. It is also called as CPI rural plus urban. That is what it is used. Wonderful. Good to see. Good to see all of you participating and answering question. Very nice. Well done, guys. Your preparation is on the track. Now, see, so if you look at the headline inflation, of course, it was increasing, right? Now, you can clearly see that now the inflation is coming down, and that is why the cost of production was low. Now, decline unemployment, you see, how do we measure unemployment in India? This question was asked in UPSC, if you remember, mains. Last year, 17th of September, GS paper 3, UPSC mains exam, this question was asked, that how do we measure unemployment in India and what are the corrections that we should make in it? Of course, one of the corrections that we should make in measuring of unemployment in India is that we should improve the data collection. And yes, the survey that is done to find the number of employees should improve. But what is the method that we use? The data to calculate unemployment is collected through periodic labor force survey, which started in India around 2017. NSO started it. Now, why did we do that? Because we needed more frequent data related to unemployment. And what are the methods that we use to calculate unemployment in India? Anybody, if you remember? What is that method which you will always find in economic survey and budget? They use this method to report the unemployment figures, if you could recall. Usual, principal. No. This is that method which is used. The data is collected by periodic labor force survey. Yes, UPSS, absolutely correct, UPSS. So that is the method that we use to, mostly the unemployment figure that you see in India is reported using that. Very good, good. Now, So based on that, we can see that unemployment is declining in India. Now look at this, guys. Let me tell you something which I did not like at all in the interim budget from students' perspective, because interim budget just gave this, this particular picture. This they gave this image and they say that gross non-performing asset in India is coming down, and they said on September 2023 it was 3.2%. Fine. Now, this one I don't like, reason being that they just gave this image and they expect the students to find out the remaining details. That's very bad in interim budget, because interim budget is hardly a few page document. But what they do is sometimes they will use a word and then they will say other performance indicators are also okay. Now they assume that it is the responsibility of the society and everybody to find out what are those other performance indicators. See, guys, you are preparing for UPSC, or maybe out of curiosity, even if you're not preparing for the exam, out of curiosity you might Google and find out that what are the other performance indicators. But then it takes a lot of time of yours. How would you know which performance indicators to target? These are the things where, some smart approach has to be adopted in order to find out that, okay, when the interim budget or the document says that all other performance indicators are doing well, which other performance indicators? There are so many, right? So let me tell you what we are going to do here now. There are two, three things that we should examine here. First is gross NPA. What is gross NPA? Gross NPA is the total amount of loans that the bank has given, which has become NPA. That's gross NPA. So you can clearly see in scheduled commercial banks, the gross NPA in 2019, March 2019 was 9.07%. In September 23, it has become 3.2%. Huge improvement. What will UPSC do? There are so many steps taken by Reserve Bank of India and Government of India, including SARFAESI, Debt Recovery Tribunal. So many things were done, right? So any scheme, any program launched by RBI or Government of India can be asked in UPSC, because they have said that our gross NPA has come down and so many steps were taken. So many steps were taken, though there are 1 dozen steps taken. Now we have to prepare each of the steps, especially for mains. 100% we have to prepare. And since government is boasting it that yes, we have been able to control the non-performing assets, so before prelims, make sure that you revise all the important schemes. I gave you an example like SARFAESI, Debt Recovery Tribunal, Asset Reconstruction Companies, bad banks, all these concepts you will have to, Indradhanush, all these concepts you will have to revise. Now, net non-performing asset, 2022, 1.67%, 2023, 0.95. It is below 1%, which is very, very good. Now, what is this PCR? Provisional Coverage Ratio. What is this? So whenever a bank feels that the loan that it has given will become non-performing asset, so bank has to make sure that from its profit it keeps some resources in its pocket, right? So that is called as provisioning coverage ratio, PCR. So in India, the provisioning coverage ratio has improved from March 2022 to 2023, 86% to 90%. This you have to do. And there is something very unique. There is a reform called as ease reform. So guys, what is ease reform? See, enhanced access and service excellence. Ease reform. What is ease reform? To improve the performance of the public sector banks, right? What did the Government of India do? Government of India introduced this ease reform, and government said that there are 22 action points which the government wants to achieve in the public sector banks, which are divided in 4 themes. So what is the first theme? Customer service has to be good. Remember going to a public sector bank and public sector bank says lunchtime, sorry. Or you go to public sector bank, go to counter number 1, they will send you to counter 7, they will send you to counter number 13, and counter 13 does not exist. Right? So government also knows this. That is why the government says that we have to improve the customer service. And second, the government says that we must improve the business of the public sector banks based on digital technology and data analytics. Similarly, guys, the government says that we also have to build the capacity of public sector banks. So for example, somebody comes and wants a huge loan, right? For example, King of Good Times comes again to India. I don't think he will come. But suppose he comes to India and again he says, I want more loan. This time not 14,000 crore, but this time 20,000 crore. Our bank should have the capacity to provide the loans, right? Now, developing people and enhancing HR operations. We have to train the banking personnel as well so that they also are able to give their best in the banking industry. So these are the things that we have to see. And I told you that whenever you get a graph like this, so Bacho, there is one important thing. Whenever you get a graph or a picture like this, make sure that you remember the current figure. For example, the gross NPA currently is 3.2%. Similarly, net NPA is currently less than 1%, 0.95%. That you must memorize. Plus, also remember the trend, that what has happened in last 5 years. So this type of trend is called as declining trend. Right. So remember the current figure and the decline. These two things you have to memorize for UPSC. Now, again, this was not given in the interim budget. One line was written in the budget that this Jan Dhan Yojana has done really well in terms of financial inclusion. That's it. That is where they create the trouble, because when they mention a word and they don't explain, how is a student, a young mind like you who has so many subjects to study, how will you find out what to study and from where? These are the problem areas. And also, I feel there is one problem that along with the interim budget document, there should have been a dossier which talks about these kind of things which are referred to in the budget, like PM Jan Dhan Yojana talks about this, but they didn't give all the details in a consolidated manner. And how does a person who does not know data or softwares to extract data get to understand these things? Very difficult. So what we will do in our classroom is, that is what we have to do. So when I say that, current affairs, etc., to be taught, literally, if you ask me very candidly, current affairs is not to be taught, current affairs is to be understood. But to understand, you have to be taught current affairs, because the way government presents the data and the fact is not very efficient. So look at this, guys. For example, look at the performance of Pradhan Mantri Jan Dhan Yojana. So the number of Pradhan Mantri Jan Dhan Yojana accounts, right, is 50.63 crore. Do you need to memorize this? 100% yes. In mains, if a question is asked on financial inclusion, how will you write? Then deposits in the account, you don't have to memorize the deposits. Number of women beneficiaries is 55.5%. This you have to understand. So women-led Jan Dhan accounts are more than men, right? So because women save more, right? And you understand where men will waste the money here and there, useless things, right? Number of beneficiaries in rural and semi-urban areas. So 66.8% of the beneficiaries is present in, they are present in the semi-urban areas or rural area, and number of RuPay cards 34.36. Now guys, see, there is this particular picture which is given in the interim budget. It talks about rising volume of digital transactions. So government of India is pushing digital transactions a lot. And in fact, just before having this session with you, in the morning itself, I was reading the update related to how many countries are going to use UPI. Astonishingly, the number of countries are increasing. So as Dr. Geeta Gopinath had also said in one of the research papers she wrote for IMF, that demonetization did two things for India. It led to many negative impacts like falling GDP. And second, she mentions that one of the good things that came because of demonetization was that we got a huge push in terms of improvements in the digital transactions and the use of digital payments in India. So these are the two things she wrote in her research paper, and it clearly shows the number of transactions, right? I know we are very excited looking at this, but I'm not sure how excited Paytm boss currently is, because it's going under a lot of problems, regulatory issues. And I know that this is not the day and occasion to talk about Paytm, but just before I started the session, I was reading that there has been allegations of money laundering. So one PAN card has been used multiple times to open accounts in the Paytm bank. Interesting case study for us. So why did I talk about it? Because I wanted to make sure that you understand that whenever you promote digital technology, two things will happen. Cyber crimes will increase. And number two, there would be one more issue, which is that black money and money laundering, yes, it becomes very sort of, it becomes a very real threat. So we have to be very confident about that. So old concepts related to budget. See, guys, this is what I have done in the budget. Are you supposed to memorize all these components of the budget? 100% yes. So this is what the budget looks like, a normal budget. See, budget has two parts, revenue budget and capital budget. You understand this, right? Now, revenue budget has two parts. Revenue receipt means day-to-day normal sources of income for the government, and revenue expenditure, day-to-day sources of expenditure. Similarly, capital budget has capital receipts, right? So capital receipts and capital expenditure. What are capital receipts and expenditure? Let me tell you the definition. The capital receipts and expenditure of the government of India make changes in two things. Either they change the asset of the government of India, asset means property, or they change the liability of government of India, which means that either the government's burden will increase or burden will come down, or the government of India's property will increase and property will come down. So wherever somebody will ask you, what is the meaning of capital account? Just tell them in a very chilled out manner that capital account means that account which talks about changes in the asset and liability position of the government of India. And when somebody says, what is the revenue budget? Tell them revenue budget is about the normal sources, regular sources, day-to-day sources of income as well as expenditure of the government of India. Is the audio okay? Audio issues there? Okay, let me see if we can fix it. Is it fine? Okay, cool. Now, so guys, look at this revenue receipt. Revenue receipt is of two types. So there are two regular sources of income for the government of India. One is tax, and you understand two taxes, direct and indirect taxes, and there is non-tax. Non-tax, for example, the traffic challans, etc. No, it happens. For example, this is the month of February. In a few days, you will drive your bike very fast because you will have to reach a point to meet somebody. In that, you will jump the traffic light. Traffic challans will be imposed over you. That is the call that is called as non-tax revenue, right? Just be careful. So, so these are the non, and plus the dividends that the government gets. Yeah. So they are also called as non-tax revenue. What is revenue expenditure? Revenue expenditure means wages, salaries, pensions, all these normal things which the government of India spends, and grants from central government to state government. So the grants given by center to state is also called as revenue expenditure. What are capital receipts? So, but capital receipts are of two types. There are two ways in which the government of India receives capital. The first is non-debt creating, which means this is the money which the government does not have to return. I'll show you. So for example, look at this. Suppose that I'm the government of India, I got this cash. So out of this 120, right? Out of this 100 rupees is mine, which I don't have to return to somebody. That is called non-debt creating. But this is the money which I got, but I have to return it to somebody. That is called debt creating, right? So by the way, if I ask you a question, simple question, huh? That suppose that these are the two currency notes that I'm getting in terms of capital receipt. I'm the government of India. Now, this I showed you, the higher one. This I don't have to return to somebody. This is mine. And how do I get this? By selling public sector enterprises, disinvestment, privatization. This is the money which the government got by issuing treasury bills, bonds. So this is the money which I have to, because when government sells bond, government has to return the face value also. So this is the money which government takes as loan or by selling bonds, which government has to return. This also stays in my pocket, but this has to go. Which out of these two, 100 or 20, which out of these two can be called as borrowings by the government of India, actual borrowings by the government of India? If you could answer, 100 or 20. So your friend Ravi says that, sir, one lecture on Paytm. So you want a lecture on Paytm or you want a lecture on how to create black money? On a lighter note. 20, of course, 20. So can I call 20 as fiscal deficit? Of course, yes. So, so Bacho, there are two things which I would suggest you before you open these documents called as budget. I strongly suggest that you revise two things. One, this whole presentation that I have given you, this you must revise every component carefully. And second is you must brush up. Absolutely, 20 is the right answer. So, and you must brush up your concepts related to balance of payment, like what is trade deficit? Yeah, what is trade deficit? What is the meaning of balance of payment deficit, etc. These things you must revise. Now, so many of you are asking where to get this. I'll tell you. Did you notice something? That I have drawn it in my own handwriting. Why? Because when you do something with your own handwriting, it stays in your mind and heart forever, isn't it? That case. So remember good old days when people used to give greeting cards, remember? And there they used to write messages, how are you, etc., etc. Other messages I can't even read. But these days, what do people do? Send big text messages, no response comes. So that is the importance, right? Yeah, letters and everything. Yes. So, so when you write something on your own, in your own handwriting, it's still in your mind. So I strongly suggest that after you complete watching this lecture, when this video is available to you, so you should make sure that you draw it somewhere in your notebook. Now, guys, one of the very good ways to understand yeah, one of the very good ways to understand this year's budget and the numbers that are there in the budget, I'll tell you something. I could have easily shown you this side and I could have told you that, see, this is how you calculate budget deficit, revenue deficit, effective revenue deficit, fiscal deficit, and all these things. I could have easily shown you this. But I think this is a very bad way. In today's lecture, I thought I'll do something different with you. I'll tell you exactly how to use the real numbers of the budget, right, to arrive at all the formulas that you study in your fiscal policy, because this is one area where I feel that, yeah, so this is one area where I feel that a lot of confusions are there, because whenever I meet my students, they always tell me that one area which they find to be very difficult and chaotic is fiscal policy, along with topics like, let's say, inflation, etc. So one of the good ways to understand fiscal policy is to make your own flow charts, make your own notes, etc. It really helps. A static area always helps. Like I showed you the structure of the budget, you must write it in your own handwriting. The second thing that you should do is this chart. This chart is very crucial. See, guys, I could have easily drawn it on a computer, but then the problem is that whenever you use a lot of machine, etc., it doesn't get registered here. You should also do something like this in your own handwriting. Let us see what is this. Budget 2024. And in this budget, there are two types: revenue budget and capital budget, as I already told you. Now, revenue budget, there is revenue receipt and there is revenue expenditure. On this side, there is capital receipt and capital expenditure. See, guys, revenue receipt. How do you get the revenue receipt? Through tax, through non-tax. So total this year, the revenue receipt is roughly around 30 lakh crores. This is net revenue receipt. Now, which has increased. That is why I've written plus, because compared to previous year, it is better. Now, out of this 30 lakh crore, 26 lakh crore is tax revenue and non-tax revenue is 4 lakh crore, which means through traffic challans, dividend, etc., government got this, and through taxes, we got 26 lakh crores. Now, what is the revenue expenditure, like wages, salary, etc., which the government spends? 36.5 lakh crores. Similarly, guys, in the capital budget, you can clearly see that this year, the capital receipt is 17.6 lakh crore, which is slightly less compared to last year. Now, the debt, capital receipt, debt means this is the money which the government borrowed by selling bonds, by taking loans. This is 16.8 lakh crore. Remember this. This is the debt. And the non-debt, which means that, for example, the government got this money by selling government companies, or the government recovered its own loans. So this is very low, but debt amount is very high, 16.8 lakh crores. Now, capital expenditure, see, capital expenditure is called as capex, right? Capital expenditure. Capex is 11.1 lakh crores. This is higher compared to last year. Last year it was around 10 lakh crore. This year it is around 11.1 lakh crores. Now I'm going to do some, these are real numbers, by the way. I have just done the rounding of the numbers, but mostly these are actual numbers that I have taken from the interim budget. Now let us try to see how to understand this. Just for fun, I'm doing this, right? So that you understand the fundas really well. Now, what is the formula of total revenue? What is the total revenue? So total revenue means the money that the government of India earns. So the government of India earns this one, revenue receipt, and the government of India also earns capital receipt. Add it. So this is 30 lakh crore plus 17.6. 30 plus 17.6 is 47.6 lakh crore. This is the total revenue. Now, what is the total expenditure? Total expenditure is revenue expenditure plus capital expenditure. Let's add it. 36.5 plus 11.1, 47.6 lakh crore, which means that total revenue is equal to total expenditure. So what has just happened, guys? We have just seen that if you calculate the budget deficit of government of India, budget deficit, total expenditure minus total revenue is zero. Balanced budget, right? Now, of course, government of India will balance everything out. So now what is revenue deficit? Revenue deficit is equal to revenue expenditure minus revenue receipt. So whatever government of India spends right, on regular basis, and what is the regular source of income. So 36.5 lakh crore minus 36.5 lakh crores, that is actually the revenue deficit. What is effective revenue deficit? So in this revenue deficit, there is also that money which is given to the state governments, which the state government used to create assets. So we remove this revenue deficit minus grants to state government for capital assets, 2.6 lakh crore. Now fiscal deficit, guys, your favorite formula. What is the formula of fiscal deficit? See, fiscal deficit means, look at the formula. First I'll show you the formula, then I'll tell you the meaning. Fiscal deficit means total expenditure, right? What is total expenditure? Revenue expenditure plus capital expenditure. Total expenditure of the government of India minus revenue receipt. What is revenue receipt? Revenue receipt is that revenue which the government of India gets, which the government does not have to return to anybody. That completely belongs to government of India. What is revenue receipt? Tax revenue plus non-tax revenue. So revenue receipt plus non-debt creating capital receipt. What is non-debt creating capital receipt? For example, disinvestment income that the government gets, because government does not have to return it. Does the government have to return tax and non-tax revenue? No. Does the government have to return the disinvestment revenue? No. If you add these two things, this is the money which the government does not have to return. It is not debt creating. Now, what is fiscal deficit? Fiscal deficit is equal to total expenditure minus all the non-debt creating revenue that the government of India has. Right. So now let me explain to you in a slightly different way what is the meaning of fiscal deficit. So see, guys, what is fiscal deficit? Suppose that I'm spending this much money. To spend this much money, so this is the money which I spend. To spend this much money, what I did is I earned some income which became mine through regular sources, that is this. I also got some money by selling my companies, disinvestment, which is this, add it. So to spend this much money, I arrange money through regular sources, tax, non-tax, plus by selling companies. But that money is only this. So ideally I should have spent this, but how can I spend this? Because my revenue receipt and non-debt capital receipt is just this, but my expenditure is this. How did I get this? This is borrowings, which means whenever we spend money, the part of the expenditure which we have spent by borrowing the money, which we have to return, that is called as fiscal deficit. So if you look at the calculation of fiscal deficit in our formula, it says total expenditure minus revenue receipt plus non-debt creating capital receipt, 16.8 lakh crore. And here you see magic, huh? You see here in the budget, there is something called as debt creating capital receipt, 16.8 lakh crore. Both are equal, which means fiscal deficit is nothing but government borrowing. Now, what is primary deficit? Primary deficit is equal to fiscal deficit, which means what government of India has borrowed. But mind you, government of India also borrows funds to pay the rate of interest on the previous year loan. Suppose previous year, the government took some loan. Before that, government took some loan. Before that, government took some loan. Government keeps on taking loans. And for that, we have to pay interest rate. So from fiscal deficit, if you remove that part, which is the interest rate on previous loans, you get something called as primary deficit. And what is capital expenditure? Capital expenditure is simple. This is the capital expenditure. In our budget, the capital expenditure is 11.1 lakh crore. What is effective capital expenditure? Called as effective capex. Huh? So effective capital expenditure is equal to capital expenditure, which means the money which the government uses for construction of assets like road, railway, airport. So capital expenditure plus grants given to state governments for creating capital assets. Central government creates capital assets, for example, roads, railway, bridges, schools, hospital. Similarly, state governments also does that. So whenever you add the central government's expenditure plus the money that the center gives as grant to the states to create capital assets, if you add both of them, that is called as effective capital expenditure, capex, which is 15 lakh crore in India currently. So capex is 11.11 and effective capex is roughly around 15 lakh crores. Which means, guys, did you notice something? That by looking at these numbers, which I have taken from the interim budget, basic numbers only, and the formulas are very static formulas, which you can find either in NCERT or Tamil Nadu board. You can easily find these things, or any standard class notes in yellow books, you can find this. These are basic formulas. I'm just playing with real numbers. Now, there is one interesting formula which I found in the interim budget. Again, the interim budget does not talk about it. Uh, it does not talk about it explicitly, but it is mentioned in the interim budget. I'll tell you the formula. And this can be asked in UPSC. Look at the formula, guys. The formula says that there is something called as the capex fiscal deficit ratio. What is the capex and fiscal deficit ratio? So capex fiscal deficit ratio is capital expenditure upon fiscal deficit. Let's write it. Capital expenditure 11.11 lakh crore. We already saw finance minister announcing this. And fiscal deficit we have seen 16.8 lakh crore. If you take this ratio, you get roughly around 66%, or you get 65.9%. This is called as capex to fiscal deficit ratio. What is the meaning of this? The meaning of and the interpretation of this formula is, so I'll give you an example. So suppose that government of India borrows, fiscal deficit means borrowing. Suppose government of India has borrowed 100 lakh crore. Out of 100 lakh crore, what is that percentage which has been used for creation of capital assets like roads, hospitals, school, airport, and seaport? That is 66 lakh crore. It's very good actually. It has improved. Imagine the government borrows funds and wastes the money. That's not a good sign. But here we are borrowing and we are using it for creation of capital assets. So that is the formula called as capex to FD ratio. Now, similarly, guys, we can calculate effective capex to FD ratio. What is this formula? See, this is effective capex 15 lakh crore upon fiscal deficit 89%, which means that the amount of money that the central government uses for creation of assets, if you add the grant given by the central government to state government, add both of them, that is roughly equal to 15 lakh crore, right? So that is called an effective capex. And what do you take here? Fiscal deficit. This is 89%, which means out of 100 rupees that the government has borrowed, 89% has been used effectively for creation of assets. I would say that's a good number. So at this point of time, don't you feel that we should have a look at capex, capital expenditure of the government of India? Let me show you the capital expenditure. So there we go. Oh, before that, you can have a look at this trend. This is given in the interim budget. So let me show you this very basic. So what is mentioned? We have done all the calculations, right? So now here you can see that we are taking fiscal deficit as a percentage of GDP, revenue deficit as a percentage of GDP, effective revenue deficit as a percentage of GDP, and primary deficit as a percentage of GDP. Remember, we did all the calculations here, all these calculations. If you divide it by GDP, you will get these numbers. So you can clearly see that this is fiscal deficit. The fiscal deficit has come down, right? It's 5.1%. Revenue deficit has also come down. You can clearly see revenue deficit is 2%. Now you can also see effective revenue deficit coming down. Effective revenue deficit is 0.8%. You can also see primary deficit coming down. So what is the trend? UPSC will ask you. The trend is all these things have been coming down in India. Now, why do we have to control all these deficits? Because of FRBM Act, right? So UPSC can ask you, what is the trend? The trend is in last 4-5 years or 3-4 years, after especially COVID, it has all been coming down. And during COVID, our deficits were very high. Why? Because there is a rule. There is something called as business cycle. So guys, this is business cycle. What is business cycle or economic cycle? Just like we go through good phase of life and bad phase of life, every economy, every society goes through good and bad phase. So for example, this is good phase, but this is bad phase. So during COVID, we were here. During COVID, when the economy was going down, what did the government do? The government of India started to invest more money. Government of India put more money in their Manrega health expenditure. So what happened because of that? This line that you see now, this line, this started to shift up. This started to shift up. That is why our deficits were very high. But now we are entering good phase like this. So that is why, since we are entering good phase, now government need not borrow a lot of money. So guys, whenever things are not okay in the economy, when economy is undergoing recession, the government follows a policy called as counter-cyclical fiscal policy. What is counter-cyclical fiscal policy? When you are feeling low and stressed in life, wherever you are feeling depressed, what should you do? Should you cut off from rest of the world and say, I will not talk to anybody? No. Exactly at that time, you should make more efforts. Your UPSC Prelims exam is coming and now you are feeling very low or very confused. What should you do? You should put more efforts. Because when things will be fine anyway, it will be fine. But when things are not fine, if you put little more effort, just little more effort, who knows, you are the next champion. So the government of India works on the same principle called as counter cyclical fiscal policy. When things are down, the government spends more money to revive the economy. That is why this trend. Now let me tell you, there is something called as quality of expenditure. This UPSC can ask you that which of the following talks about quality of expenditure in India, revenue deficit or which of the following talks about quality of expenditure? So revenue expenditure or capital expenditure? Answer is capital expenditure. If capital expenditure is higher, quality of expenditure is good. I'll give an example. So suppose that you have this 100 rupees. So somebody said, where is that 100 rupees? So here's that 100 rupees. Suppose you have 100 rupees. You have two options. Either you go in the market and you purchase newspaper and some good books to study. That is your capital expenditure because it gives you knowledge. Or you use this 100 rupees to buy momos. Like, momos, though there is no limit to eating momos, but if you buy good books and good newspapers and magazines and good novel to study, of course, it will be a capital expenditure. But that's called good quality expenditure. Right. So let us see what has happened in India. Now, guys, you can clearly see this, that expenditure, two types, revenue expenditure and capital expenditure. Now, see, what has happened is every year, these are different years. So this is example 2022, 2021, 2020, 2019. So you can see that our revenue expenditure has been, so what is the total expenditure of Government of India? Total expenditure is equal to revenue expenditure plus capital expenditure. Our total expenditure has been increasing because we are a developing country. We spend a lot of money. But out of total expenditure, the contribution of revenue expenditure now has started to come down. See, first it was 88%, 85, 81, 77% last year. This year, out of total expenditure, what is the percentage of revenue expenditure? It's 76%. Actually, it has come even more down. And what is the contribution of capital expenditure? See, earlier it was 12, 15, 19, 23. Now it has become 24%. How did I know that? Very simple. Revenue expenditure 36.5 lakh crore, capital expenditure 11.1 lakh crore. I added these two and then I found 36.5 divided by 46.7. If you calculate, you will get these numbers, which means out of total expenditure, currently revenue expenditure is 76%, capital expenditure is 24. It looks very bad because capital is less. But if you look at the past trend, you can clearly see India is improving. Earlier, we were not putting too much money in capital. Now we are putting too much money in capital expenditure. So yes, we are improving. This chart, this table I have created, this you will not find in the interim budget, but this you will find in a lot of data that has been used in the interim budget documents. So with every budget, there is a medium-term policy document released by Government of India because of FRBM. In those documents, these numbers were hidden. I just pulled it out and created a table. So see, what is this? Capital expenditure to fiscal deficit ratio, which means whenever we borrow 100 rupees, out of that, how much we use to create assets. So suppose we have borrowed 100 rupees. Out of that, we were earlier spending 42 rupees to create assets like roads, hospital, school, then 54, and now 65.9 means 66, which means every time we borrow 100 rupees, roughly around 66 rupees goes in the construction of capital goods, which means roads, bridges, hospitals, school, etc., which is called as capital expenditure. What is effective capital expenditure to fiscal deficit ratio? Remember, effective capital expenditure is capex plus grants given by central government to state governments for creation of capital assets. So this ratio is also improving. So that's a good sign for the economy. Now, what are the sources of deficit financing in India, guys? So whenever Government of India feels that we are overspending money, so from where are we getting the money? Our fiscal deficit is high. So where are we borrowing? Right, see. So if you look at the sources of borrowing, you can clearly see market borrowing, government security. This is market borrowing. Government securities is the highest, which means amongst various sources of borrowings, the money that the Government of India gets by selling government securities or government bond is the highest. This is called market borrowing. Now, similarly, there are short-term borrowing through treasury bills also. Treasury bills is a very small portion. Treasury bills is less than 1 year. When the government borrows for less than 1 year, that's treasury bills. So less than 1 year is this, and long-term borrowing is this, which means long-term borrowing is there, more than 1 year borrowing. And whenever government borrows, if the government borrows for long time period, it's good for the government because government has to return the money at a later date. The next one is securities against small savings. So guys, have you heard of National Small Savings Scheme, NSS, Kisan Vikas Patra, which earlier used to come, similarly Provident Fund? So what happens whenever people deposit their money through these schemes, the government has to pay interest rate to them, right? So that is, I mean, there is called a security against small savings. So that is also a portion, right? You can see it's a very substantial portion. Now, what is government debt? So you can clearly see government debt means the various channels through which the government borrows, right? So for example, internal and external debt, this is called public debt. For example, government of India borrows by selling treasury bill, government bond, or government takes loan from World Bank. So that is external, and internal is government borrows money by selling treasury bills. So internal and external, this is called public debt. Second, whenever government of India starts schemes like national savings, small savings certificate, right, or provident fund. So whenever people buy those small savings schemes or provident fund money, where does that money go? In the public accounts. So the money that comes in the public accounts of the government of India, that is not government's money. That government has to return because people have deposited the money under various schemes. So that is also public account liability. And third is sometimes our public sector companies, government companies, they also take loans, right? Public sector enterprises, they take loans. So they are called as extra budgetary resources. So there are basically three components of government debt. This is problematic area for government of India. You know what has happened after COVID? After COVID, because we had to remove a lot of restrictions from the economy, we had to improve the economy a lot. So government of India had to actually, after COVID, borrow a lot of money from various agencies, be it World Bank, be it Asian Development Bank. Why? For improving the infrastructure, for making so many changes, positive changes in the economy. So our total debt of the government increased a lot. IMF released a report and said that the debt of the government of India, in worst case scenario, if things are not okay for India, in worst case, what could happen is India's debt to GDP ratio might become 100%. What is the meaning of debt to GDP ratio? The meaning of debt to GDP ratio is if I earn 100 rupees and if I earn 100 rupees and this entire 100 rupees I have to return because I borrowed money in the past from somebody. So debt to GDP ratio means whatever I earn in my economy, exactly that much money I have to return to somebody because I borrowed that fund. So that is called a debt to GDP ratio 100%. IMF says worst case for India could be this. But then there is something interesting. Worst case for India is 100% debt to GDP, but worst case for other countries is even 120 and 140 also. So in that sense, government of India is defending itself by saying, yes, worst case could be this, but for other countries though, if they earn 100 rupees, they have to return 120 rupees. That is one defense. Second, government of India says our debt to GDP ratio is high after COVID, which is so natural because we are trying to come out of a crisis. But our debt to GDP ratio is far better than some of our comparable economies across the world. Like India could be compared to US, Germany, France, UK, China, right? We can't compare ourselves to small countries, right? So government of India says in that sense we are good. So if you look at the debt to GDP ratio of government of India, last year it was 58.1%. Now this is 57.2%, which is slightly better. But if you look at the general government debt, which means central government also borrows money, state government also borrows money. So see, in 2020-21 during COVID time, our central plus state, their debt to GDP ratio was 88%, but in 2022-23, it became 81%, which means combined debt of center and state improved, right? So there are two ways to look at debt. One, only look at the center state, which is this. One is look at both center and state combined, which is this. NK Singh Committee 2016-17 said that the combined debt should not be more than 60%. So 40% for center and 20% for states. Right, this is what the NK Singh committee said. 40% for center. But look at center's 57.2%. This is where I feel that the government needs to improve a little bit to make it better for the economy. Now, guys, as you can see that we are still discussing the various indicators of economic development. So this is the collection of GST. GST collection, as you can see, is going up, isn't it? So 0.9, 1.2, 1.5, 1.7. This is the GST collection, monthly GST collection. On an average, it has gone up, which means GST collection going up could mean two things. One, that the government of India has been able to improve the tax efficiency, which means efficiency of collection. And second could also be that economic activities have bounced back, which GDP shows that yes, economic activities have bounced back. So two things. Now, what is the direct tax collection in India? Direct taxes like income tax, etc. In last 10 years, our direct tax collection has improved three times. It has become three times. Similarly, earlier, if you had to take any refund from the government of India, it used to take 3 months. Right now, it is taking hardly 10 days. This is ease of doing business. That's good. What is tax buoyancy? Tax buoyancy means whenever the GDP of India increases, right, government of India should be able to collect more taxes without changing the tax rate. So our tax buoyancy, tax revenue upon GDP, it has improved. What is the meaning of buoyancy? As economy GDP increases, the GDP of the economy increases, we should be able to collect more taxes without changing the tax rates. So tax buoyancy has shown improvement. Now, there is one more thing which is new in this interim budget. The government of India has said that sometimes what happens is, many a times when people file their tax returns because of some errors, or because calculation mistakes have happened, or because somebody did not pay the taxes properly. So what happens is, in many cases, when government of India checks the documents, suppose I earn income, I pay taxes, but there has been a miscalculation and I have not paid, let's say, full amount of tax. Let's say that I was supposed to pay 80,000 tax, but I paid 60,000 tax. So government of India sends a notice and says, please pay the remaining amount, etc. So government of India found out that all the cases which are before 2010, which means 2010, 9, 8, 7, all those previous cases, right, wherever the mistake in the tax calculation was up to 25,000 rupees, and after 2011, so 2011 to 15, if there has been an error in the tax calculation up to 10,000 rupees or less, in these two cases, government says government is ready to forego it, and government says I will not create any demand. Otherwise, government keeps on sending notices that, oh, you have not paid your 26,000, 27,000, 30,000, or 20,000, 15,000. So if the amount of money, that is the miscalculation part or misreporting part, which is less than 25,000, right, less than 25, but before the year 2010, then government says I'm ready to forego. But for 2011 to 15, if the amount of money that you are supposed to pay to the government is 9,000, 8,000, 7,000, which means less than 10,000, the government says, I'm ready to forego it. So how many people are going to get the benefit of this? 1 crore taxpayers are going to get the benefit. And why do you think that cutoff year is 2010? That is not mentioned in the interim budget. That why, if you have a problem in the tax payment till 2010, if you have paid miscalculation, etc., up to 2010, then you are supposed to pay it to the government. Why this 2010 cutoff? Why? Because in 2010, most of the records of government of India was digitized after 2010. So digitization of the income tax record, etc., happened. So government of India said, when major digitization happened and some changes were made in the way the records are kept, so government said that will be the cutoff year. So before 2010, when mostly it was manual, etc., government says if there has been a miscalculation, it's okay. If the miscalculation is less than 25,000, it's okay. That is the reason actually. Now, so guys, this is the way we are going to approach the budget. And let me tell you the other part. So for example, you remember I told you that if you look at this year's uh, interim budget, so you can clearly see that this is the first part which we have done just now. Now this is the second part. The second part will be more exhaustive because it talks about the strategy for Amrit Kaal, where we are going to do the 6 strategies. We have to do it for UPSC purposes, and next part is way ahead. And it is in this part, the strategy for Amrit Kaal, which is, see, the strategy for Amrit Kaal, which talks about infrastructure investment, agriculture, sustainable development, inclusive development, and research and development. It is in this part that we have to focus for both prelims and mains. In this part, which we have done so far, the focus was mostly, or let's say 99% focus was prelims. So if you could revise it very quickly, I think it will help you. And what I have done is, along with this session, I have created a document for you called as Smart Current Affairs. Yeah, Smart Current Affairs kit is there, which you can use. So if you have registered for this webinar, you will definitely get that kit. And in that kit, there are 2, 3 things that we have done. First, I have given you exhaustive notes of this year's budget, all the parts, which means what I taught, plus what are the remaining parts, everything, all the notes are covered there. And there are MCQs with solution, detailed solutions are there. So that also you can study. And what we are going to do in our current affairs program is, this part I have already shown you. These parts we are going to do in detail in our current affairs program, because this is going to take time. We are going to do this, let's say, one by one, all these 6 components we are going to do, and then we are going to do way ahead. So this is the plan for the coverage of the budget in the lectures. Now, so far, tell me if you faced any issues related to understanding of what I have taught you. So if you would have noticed, I tried to do 2 things with you today in this session. One was to tell you exactly how to study and approach the interim budget along with the teaching part, because that approach is very, very important. Yes, PDF. So if you have registered for this webinar, you will definitely get your kit. No, corporate type of news you can leave for UPSC purposes. That is more relevant for MBAs, but for UPSC purposes, the corporate type of news you can leave. Current affairs, no, you don't have to, Arush. If you enroll for the program, you don't have to do that. We will give you the handouts. Yes, toolkit is ready. Toolkit is available. Our team made sure that the toolkit has been prepared before we started the webinar, so it's available. If you have registered, you will definitely get it. You will get it, I think. Let me find out. I think by tomorrow or tonight somewhere you'll get it. Toolkit is ready. I have seen that because I have created the handout there. And there are MCQs also with solutions, so you're going to get it right. Tax buoyancy, definitely. So the meaning of tax buoyancy is that suppose the GDP of India increases, right? Now, whenever GDP increases, that means that somebody is earning income. That means when income increases, that person should pay higher tax. Because suppose when my income is 100 rupees, I'm paying 20% of that as tax. So out of 100, I'm paying 20 rupees as tax. See this? My income is 100, I'm paying 20 rupees as tax, 20%. But if my income becomes 200, I should pay 40 rupees as tax. So what has happened is government has not increased the tax rate. Tax rate is still 20%. But as GDP increases, my income increases, I pay more taxes. This is called buoyancy of tax. In buoyancy of tax, whenever economic activity increases, GDP increases, the government collects more taxes because tax collection system is good, transparent, people are paying taxes, which means government need not change the tax rate at all. That is called as buoyancy. Yes. So there are various, that is what I told you, that whenever you actually measure unemployment in India, the data that you use is periodic labor force survey data. Yes, and there are various methods of measuring unemployment, current weekly status, right? You remember that? So you can call it off now.
So I hope this session was like amusing and also profoundly insightful. Now coming back to what we have talked earlier in this session, this was only part 1 of the discussion of interim budget. The rest of the discussion will be available in our Smart Current Affairs program, which will be starting from 17th of February. Let's have a look at it. All right. This will be starting from 17th of February. This will be divided into two phases. The first phase will be targeting prelims and would go from February till May. The second phase will be targeting mains and will go from June to September. Now, talking about the Smart Current Affairs Program 2024, this will be including phase 1 as well as phase 2. Now, people who are only interested in targeting prelims, they could enroll in Smart Prelims Current Affairs Program, which will be including just phase 1. Now, coming back to what are the highlights, actually, like what we are including in this current affairs program. First of all, the teaching mode, that will be live writing. There would be not like ready-made PPTs shown in the class, okay? Live writing on the board would be there. Second, power-packed specially curated lectures would be like prelims-oriented, mains-oriented will be provided. Avoiding bulky content. As we all know, time left is very limited. So bulky content will be avoided. The concise, sieve the best out content will be provided in this course. Frequent test after every lecture would be considered. All right, moving forward. Okay, few details. Both the courses have class timings of 2:30 p.m. Duration for this prelims current affairs program will be 3 months. And for this current affairs program, including phase 1 and phase 2 will be 8 months. Both the courses will have 3 days a week classes, and both the courses will be available in online as well as offline mode. Now coming back to the features, all right, the focus would be on significant news and contemporary developments. For example, in prelims current affairs program, we'll be discussing maps, crucial facts, and every information we could. Okay, coverage from multiple newspapers, for example, The Hindu, Indian Express, government magazines like PIB, Yojana, Kurukshetra, court judgments, Economic and Political Weekly, Budget 2024, and Economic Survey 2023-2024 will be discussed. Handouts will be provided. In prelims current affairs program, the concise handouts that double as quick revision notes, facilitating effective recall during the examination will be done. And here, in this, the material is structured with a focus on providing you with the insights that are directly applicable to answer writing and covers all the important themes, important reports, and data. Now, one more important thing, the answer writing would be in focus here. Strategy discussions on mains answer writing along with the practice questions will be done. Okay, one most important thing, students who will be enrolling before 15th and who will be enrolling before 15th of February, they can use these coupon codes Smart 15 for the Smart Current Affairs program and Smart 25 for Smart Current Affairs program 2024. I hope. All right. Okay, as we promised, we will be providing you toolkit. I hope this is visible. This is the toolkit we promised earlier in this video. Okay, those who are interested can download this. Below the video, you can download this toolkit. Okay, we will be back with another fruitful sessions like these. Till then, keep studying.